In a strong year of making lots of dough, Domino's Pizza suddenly went cold. Is this enough to burn a hot stock? Or are more profits already back in the oven?
What do you do when the stock of a high-quality company gets eviscerated in the wake of a quarter that's widely perceived as being disappointing? That's the question we need to answer when it comes to Domino's Pizza, DPZ, for all you home gamers. Regular viewers know that I have been a huge fan of this company and its stock, and it's been a terrific long-term performer, rallying from $10, where I started recommending it more than 7 years ago, up to $186 as of today. I think Domino's is a tech company with a fabulous online ordering platform that happens to sell tasty pizzas. However, last Tuesday, Domino's reported a solid quarter that had some hair on it, which caused the stock to plunge $21 or 10%, single session. You'd think the numbers must have been terrible to produce such a sharp decline, but this stock had been climbing for years. It had momentum, and it doesn't take much to derail a momentum name. Domino's actually posted a 9% earnings beat off of a $1.23 basis, higher than expected revenue, gave you some excellent 9.5% domestic same-store sales growth, but the international same-store sales only increased by 2.6%, much weaker than expected. And that's what caused the stock to get clobbered. So is this a rare buying opportunity in a fabulous stock, or do we need to be more worried about the company's international prospects? Let's take a closer look with Patrick Doyle. He is the president and CEO of Domino's Pizza. Find out more about the quarter and where his company's headed. Mr. Doyle, welcome back to Mad Money.
Thanks, Jim. Appreciate it.
All right, Pat, I got to tell you, I mean, we can spend a lot of time talking about domestic, but I really was thrilled for you to come on because of a particular word you used in the conference call about international. You said that this is a fixable problem. So can you tell us what countries that you're fixing it in and how confident you are that it is indeed fixable?
Yeah, it is. I mean, there was some weakness. All of our kind of our 4 international regions were all up, but there was a little bit of weakness, particularly in Europe. The UK is our largest business outside of the U.S. by retail sales. India has a few more stores, but higher sales per store in the UK. It was a little bit weak. It was kind of flattish for the quarter. So there are things we're working on. It's still a terrific business. They're building lots of stores. But we think the value equation there wasn't quite right during the quarter, and there are a few things that we're working on them. But we'll get it moving again. But ultimately, we've got a lot of best practices around the world that we can share with them. Obviously, the U.S. still put up a terrific quarter, and so we know what to do with the business. We're talking to them. Our head of international's on a plane over there right now, and we'll get it moving again. I mean, these things can take a little bit of time, but we know how to get these things moving.
But when I say a little bit of time, are we speaking within quarters or years?
Well, no. I mean, it certainly shouldn't be years, but yeah. I mean, we'll work through it. We'll see just how quickly we can get it moving again. But these are fixable problems. There is nothing going on in the economy, is anything external. This is about us executing, getting this right, and we know how to get this done. Okay, so I was speaking with Steve Easterbrook, the CEO of McDonald's, and he was saying to me, you know what, we had our strongest quarter, comparisons are odious, as my mother would say, but we had our strongest quarter in history in 43 years in the UK. Could there be some sort of mind share shift, pizza to burger? We've always felt that these are just not zero-sum at all. But did that figure resonate with you, that McDonald's is doing so well there? Well, I mean, certainly McDonald's had a terrific quarter overall, and I don't think it has anything to do with what was going on with us in the UK. There are some other things that we know we've got to get addressed there, but no, I actually don't think that was it. But congratulations to Steve and the team at McDonald's. They had a very, very nice quarter. But no, we know what we got to get taken care of, and there is nothing from a competitive standpoint that we're not dealing with anywhere else, and we'll work through this. Now,
you have a very aggressive international store expansion plan. Have you decided to slow that till you figure this out?
No, absolutely not. And in fact, the UK store growth is stronger than it has ever been right now. The return on investment on stores there is phenomenal. Franchisees are still building stores, and some of that, with that much store build, some of that plays into the comps a little bit.
Right.
But no, absolutely, store growth is is continuing on very strong. And, you know, look, our long-term guidance on comps is 3 to 6%, both domestically and international. We were at 2.6. It was under the range. We're not happy with that, but it's the first time we've been under that range in a very long time.
Well, that would mean you did not buy any stock back in from what I can tell last quarter, but you do have a buyback. Is this the kind of thing that the buyback is for?
Well, you know, look, last quarter we were closed for most of that window because we were going through a refinancing. That refinancing is just wrapping up, and you know, what we said is within the next week or two, we're going to go out, we're going to talk to the market about what we're doing. Refinancing is done, and so you know, that was refinancing about $900 million of debt. Got about an extra billion that we added to our total debt, and we're going to talk to our shareholders here in the next week or two about what we're going to do to that cash, how we're going to return it to them to best generate returns for them.
All right, and the huge number domestically, how much is new technology, how much is advertising? Because I know that it's gotten lost in the international shuffle, but it was a remarkable quarter, and it needs to be talked about.
Yeah, well, thank you. You know what? Our team is just getting it done. The franchisees, the system, they're doing a great job, and it's really a continuation of everything you said. Loyalty continues to do well for us. Technology is working well. The food quality, you know, delivery. I mean, it's interesting. Everybody's talking about delivery right now. We've been doing delivery for 57 years. We're really good at it. And so that service and convenience, everything continued to come together very, very well for us. So, you know, domestic story, it continues to be absolutely fantastic.
One last question. I know the franchisees must want very much to be able to have it so that drivers never have a problem finding the guy. How about GPS? How about making sure that you don't have to have just the light on, but you tell us when you're 30 seconds away and I can open the door so they know that it's my place?
Yeah, we're testing that as we speak. And so we've got that in some international markets. We've actually got a market in the U.S., and so that's part of where we're investing. We're testing that, tweaking things like that. But, you know, still a lot to come on the technology front. And part of that is around the delivery experience.
All right, terrific. To me, it's, look, your money in the bank with us. I think your money good, and I believe if you say it's fixable, it's fixable. Patrick Doyle, President and CEO of Domino's. Thank you so much for coming on the show, sir.
Thanks, Jim.
Right, you heard he's going to speak with shareholders. Maybe he puts that gigantic cash hoard that they have, because remember, they have a very, very good model to be able to buy, to work buying the stock down here. In the meantime, if Pat Doyle says it's fixable, it's fixable. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.